Hello everyone, I am your host, The Cowboy. It is Monday, April 4th, and welcome to another edition of the Chart of the Day. And I have gotten a bunch of requests from multiple traders regarding the NIFTY 50 index. And I'm trying to do my attempt in counting this market. I don't really follow it much, but I think it's worth taking a look, obviously, since it's moving so strongly upwards here in a pretty nice trend. And I know there's a lot of traders that follow it and interested in Elliott Wave as well, so I thought I'll give it a try. And I don't have a good sense for this market overall since I don't follow it, but I try my best, and hopefully what I'm about to show you here makes total sense. Guys, don't forget to subscribe and like this channel. It's very important that you guys continue to do that, and we can rank in YouTube here to continue to grow and have more views and followers and all that. So please don't forget to do that. All right, let's jump over. So this, you're looking at the monthly chart of the Nifty 50, and I have hidden all the counts. But I wanted to just kind of spend a little bit of time looking at this. It's not a super complicated count, but it is definitely something that, depending on which scale you're looking at, it looks a little bit different. So on the log scale, you can see all the proportions here pretty clearly, and then the moment you take the log scale off, it looks a little bit like that. Both of them have advantages and disadvantages, but I always try, especially when you have strong moves and when you look at the longer time frame like that, when you go back 20-30 years, you want to put things on the log perspective to see kind of how they look. But also, I want to see the size of these impulses, and kind of if I can notice from here what's a third wave, what's a fifth wave, what's a very strong, let's say, move, and what's a weaker move. So this gives me also a little bit of a perspective. So let me jump back and take a look at the log scale, and you can see in here things change. So for example, this drop that was very, very big, it does not appear as big as this one that we've had when was this, back in 2008 financial crisis, right back in there. But it's been a kind of a steady climb. So what I think in here is I'm seeing a clear trending market. Even without placing channeling, I can see that we're making, higher highs and higher lows. So this is a nice uptrend. And I don't think this is, about to change in a significant way anytime soon in here. I'd rather prefer to kind of go with the trend rather than try to fight this thing, right? It's, you might have a tendency to say, well, it's been too high. I mean, it might be a fifth wave, and all of that is fine, but there is no indications here of a major top in this market in any way. So for right now, this continues to look fairly decent. So here is what I have in terms of counts, and I'm going to put them up. Basically, what I'm looking for is I'm looking at this impulse from the lows, 1, 2, 3, 4, 5, and this creates let's say, a primary wave 1. I'm not going to go in a cycle waves and all that. We're just going to stop at the primary degree. So that means that the 0 has to kind of get that pulled back in there. So 1, 2, 3, 4, 5. This is pretty clean for a wave 1. Then we're coming down here, and you have a 3-wave decline. I mean, let's say it's a big impulse, maybe a triangle back in here, or maybe a flat formation, and then followed by another declining, maybe an ending diagonal in a C wave. So 1, 2, and then you go again in an impulse, and you go back in a wave 2. And I thought about this structure here for a while, because originally I was kind of tempted to put the wave 2 in here, and I was thinking, well, what if this is a flat formation? It's a larger wave 2, since it kind of looks so kind of sideways like that. What if this wave, it's part of this whole structure, right? And it's a larger degree of trend, it's a wave 2 primary. And I'm thinking, it's maybe, a 3-wave move in here, and then it's an ABC up in there for a B, and then, this, you can do an ending diagonal out of this move, and maybe it's a C wave. So you're going in a big flat in an ABC. And that could still be correct. The only thing that kind of draws me back from that is the fact that this move in here is pretty impulsive to be considered a 3-wave move, and it doesn't look like a B wave. It almost looks like it's being so impulsive, as a wave 1 of this lows. So keep that in mind, that I'm kind of debating between the two, but due to the fact that this is so impulsive, I'm preferring to count this as a wave 1 just to get more of an accurate idea. So see, in Elliott wave, you always try to come up with your best interpretation based on kind of how some of these counts are looking, some of the personality of the waves, and then you eliminate things that don't make sense, and you try to come up with your best interpretation. And so far, I think this is it. Now, if it changes further, you know, I allow myself to do that. But for right now, let's go with it. So going to 1-2 primary. And then the other thing is, right, you have another 1-2 which creates the larger third of a third advance, which is, you know, the meat of this move up here. Maybe it's a strong move right there, right? So counting it as a 1-2, 1-2 is not, you know, out of the realm of possibilities, right? And giving you this strong impulse higher makes total sense when you're thinking about a third of a third wave. So let's go with that. Let's go with the 1-2, 1-2, and then back in here you have another 1-2, very sharp third wave. 1-2. This was more of a sideways, so you have a little bit of an alternation guideline. This is a sideways correction. This fourth wave is a little sharper. So you go 1-2, sharp up in 3, sharp down in 4. You never enter the territory of the wave 1, which is kind of what we're looking for when you have a fourth wave pullback. Mind you, a pretty deep, you know, more than I would like, but it is fine. So go 1, 2, 3, 4, and then you do an extended fifth wave out of there, and you can go, let's say, in a 1, 2, 3, 4, and then 1, 2, 3, 4, and 5, and you do, you know, that's, to me, that's the, you know, it's a pretty clean fifth wave. If you want to go, let's say, you know, out of here, 1, 2, 3, 4, if you want to move it a little bit higher, that's fine. But I think, you know, I think I'm overthinking it. I think this move from here to this highs, you know, it's a pretty clean impulse, and I think the subdivisions in here make sense. You know, 1, 2, 3, 4, and then, you know, you go in a 1, 2, 3, 4, and 5 for the fifth wave. Or there's a small 2 here. Whatever it is, I didn't go all the way into that structure, but it does look like it fits the narrative. So, you know, let's go with that. 1, 2, 1, 2, 3, 4, and now what's happening here? Now you're having, let's say, a larger fifth wave in progress, which is another, you know, more of an extended fifth wave, because if you start your count from this lows and you go in a 1, 2, then, you know, then that's a 3, and this is another deep wave 4, just kind of what we've had back in there, right? That means that this move out of here, it's got to be a fifth wave. And, you know, the move in here stays contained. So what I usually do, right, you project from the bottom of the wave, you know, from 0 basically, and then you go to the bottom of the wave 2, and, you know, this is where the debate is, because if this, you wanted to do it at a larger degree, a trend, so if this wave 2 would move back in there, you know, you could actually connect those two. But even if it doesn't, I think, you know, the connection makes sense right there, and then you project that line from this line, from the wave 1, and that gives you, you know, somewhere the 3-wave top, and then you had, you know, a pretty strong overthrow of that move right there, and then the markets pull back, and now they're climbing again, right? They're climbing into this larger move, and here you are again towards the top of that trend line. Now, you know, how much further can you really go before you pull back? I mean, you know, you can continue to kind of drag yourself along like that, right? And you can continue to push and hug it, but I don't think, you know, there'll be a lot of power to kind of do something vertical like that. I don't think so. So, you know, you just kind of have to be patient and just watch this market, you know, slowly develop upwards, expecting at some point in the future here a probability of a sideways move, something like that, that can maybe take, you know, 3-4 years, where, you know, let's say the Indian stock market is not going to fully rally anymore, but rather fall into more of a, let's say, sideways correction in here, maybe in a fourth wave triangle at this degree, and then you can continue to push to the upside. So, you know, watch for a return towards the trend line, and I don't know how fast that's going to happen, and you know, how quick, you know, this will come. At the moment, I would remain bullish on that. And So let's jump over. So this is a monthly chart. I think I might have some internals in this move, and I wanted to kind of take a look. But back in here, I mean, you have a nice corrective pattern. I think this is going to resume higher already. Nifty is trying to push to new all-time highs. So let me go for 1 month here to a 2-week and see if I can get anything better. There you go. So this is that latest fourth wave in there. And then I think this was the top of, maybe some of my counts got a little bit screwed up. Yeah, because this wave 1, obviously it's back there, and then this was probably back here, something like that, I think. Right, 1 2 1 2 3 4 and 5. So now, because you change the time frame, so now I go up here in the 3, so I'm still pretty fine on there, wave 3. That's why I like motive wave, because in motive wave all the stuff kind of gets locked in, and then it doesn't move. So TradingView is not the best for for Elliott wave analysis. It's a lot slower, and then you can do multiple counts, and you got to save it, and it's anyway, but it's fine. So fourth wave, and then back in here, let's see. So you go in a 1 2 3 wave 4 in here, and then you push higher, and you have a wave 1, then a little bit shallow wave 2 pullback, and now you're getting another wave 3 in here, where you go, let's say, in a 1 2 3 4 and 5 out of there, maybe a small overlap, or a 1 2 1 2 3 4 and 5 4 and 5. So that could work, this whole larger third wave advance, because this drop, it's pretty sharp, and it's the it's the biggest kind of sell-off that you've had in this move since this kind of happened in here. I mean, you've had this other move, but this was a little bit shorter. So I think this is part of this advance. And then this fourth wave compares with the second, if you ask me. And then, right, it never kind of came back into the territory of the wave 1. And I like it better as a fourth. Now, you might think, well, hey, Chris, maybe this is a... can you do a flat formation out of this one, because this is such a sharp move, and how can you find 3 waves in there for the fourth wave? Well, when you have a sharp move like that, usually you get an A, small b, and then you get a sharp C wave, and that's kind of what creates that. But if you're not happy with that and you want to do a flat, it's hard for me to find it in here. But let's say you can do a wave A in here, then maybe a 3 wave up in B to new highs, and then a sharp decline. This wave 3 moves over here, and maybe that works better. Then you go in a 1 2 3 4 1 2 3 4 5, and you do a fifth wave like that, and then with a big flat in 4, that's also something that you could possibly work out like that. And then just kind of going back to study this wave 1 out of there, right? If you have some degree of overlap, you might want to look at it as maybe a leading diagonal in something like that, when that's a wave 1 2 3 4 and 5. So it kind of goes something like, it's a little bit ugly if you ask me, but I think it's kind of the best I have. I would kind of have to go in there and find out what's the issue. But anyway, this is more of a kind of a larger term looking at it. I think looks pretty good. And now this rise here is pretty sharp. I was thinking for a while, hey, what if this is a third wave of some kind, and not a fifth wave? Well, we'll find out as this market kind of progresses. But from this lows, I can see that we're kind of starting to get a little bit tired, right, from this move. And let me go to a, let's say, go to a 1 week chart for a little bit. And then, that's an impulse, 1 2, maybe another 1 2 3 4 and 5 4 and 5. So maybe that's why, this move continues to, here you go. I think I have the counts here. So this move continues to unfold. Wave 1 in here, wave 2 pullback, another 1 2 1 2 3 4 5. This completes the third, and then you have a sideways. So I'm looking at the corrections basically, right? That's a correction right there, that's a correction right there, that's a correction right here, and now you have a big correction here, and it's starting to get a little bit big compared with the second. It's still fine, but you really don't want it to get too much bigger. So this move, it's got to go, and if it kind of breaks above those levels, you know, I think you're going to get a nice rally maybe towards the top of the channel again, and in what could be a fifth wave. Now, hey, listen, if this fifth wave could extend and just you know, get much stronger, so let me kind of scrunch this in, right? You are towards the top of this channel. You know, we're getting, let's say, let me see if we're getting a little bit of an RSI divergence in here. So that's 3, 4. And you see kind of what's going to happen with the RSI if you start to kind of climb out of here. If it fails to really rally much, right, then you're starting to get this and you're starting to get that, then this market will slowly get higher, and then you're going to get a sell-off back towards this fourth wave, and maybe that's what kind of triggers maybe a larger, you know, a larger fourth wave decline kind of lower. So, you know, it still looks encouraging. You might have a little bit more room to go to the upside in here. I don't know how much more it can really go, because already it's made a pretty strong move in here, right? So that's I mean, mind you, it's a pretty big impulse. And the markets are slowly going to have to digest that, right? So maybe you have a flat in here. I mean, you have an ABC, and then if this becomes, you know, a three-wave move up and you do something like that, then you can get a 1, 2, 3, 4, and 5 decline, and you can have a big flat in here, and then this, instead of being a fourth, you know, becomes a second wave, or, you know, like a larger triangle formation at the other degree of trend. So just kind of be careful. I think that you know, this pattern in here, it's pretty encouraging. It looks good. Let me go to let's go to a 12-hour chart even, and see if I can zoom this out a little bit on here like that. And you know, so that's 5, that's 3, and then, I mean, this is a beautiful corrective pattern. It's very nice. I think it is I think it's just a simple ABC in here. Let me just kind of see if I get myself caught up in this mess. But, you know, is there an overlap there? I'm not sure. Maybe very, very slight one. So we go 1, 2, 3, 4, 5 for A, then up in B, failure up in there. This looks pretty impulsive, and you know, you could argue that if you want, it's an X wave, so you could do maybe an ABC, then an ABC up for a flat, right? So you go up in X like that, but it's not actually a flat because it's an X wave. See, X waves are not flats, only B waves. So you can't really do a WXY and say it's a flat. You just got to go with the complex correction. But since it hasn't kind of gone above those levels, I think, you know, that's fine. And then you go down in A, you know, maybe you have a move up here in this, you know, a B wave, and then you have a 1, 2, 3, 4, 5. So maybe a leading in 1, 2, 3, 4, and 5. So either way, you know, or if it's an X wave, then you go A, B, C, D, E. So that's a triangle like that. So you go A, B, down in C for a wave Y. See, you can kind of shift them both ways. You can try to come up with the best interpretation here. I think both are, you know, mighty fine. I think you can go A, B, C, and you can go WXY as well. But it is definitely a corrective pattern. And now here you are coming to kind of, you know, tag that line. And this looks pretty impulsive. So I doubt it's another X wave, and then you're going to sell off again. I think you're probably going to take these highs, and if you do, you know, this is what's going to happen. If you're going to take them up, then you're probably going to go, let's say 1, 2 in here, you know, 3, 4, and 5, and do something like that. Then you're probably going to get an ABC retest of this kind of broken trend line in here, and that should lead to the next rally in 3, 4, and 5. So, you know, things could look pretty decent for the Nifty 50 moving forward. I hope this helped. But if you're noticing the market failing and starting to pull back in here and retracing more than 61.8 of this rally, then you might be in trouble, and this market could continue to kind of trend to the downside in here. But for right now, things are looking, I think, fairly decent, and they're telling you that these highs here are probably get overtaken. So guys, I'll leave it at that. A 20-minute video, you know, a lot of detail here about the wave counts. Hopefully this works. Let me know what you think, and I think tomorrow we're going to take a look at, I'm going to give you a little preview in here. Let me just kind of save this up, and I'm going to take a look at XME, which is something that I've shorted today. You know, maybe I'm going to regret it, but I think we're getting into a fifth wave in here after a pretty strong rally, and people you know wanted to, you know, are really excited about the metals and all, you know, because of the inflation. But this market in here tells me that there could be a sell-off coming, and you know, probable move maybe back towards the bottom of this channel. Okay, so we'll talk about it tomorrow, a little bit more details, but I'll leave it at that, and I'll talk to you later. Bye bye.